After a rapid rally this year, slowdown in the US big tech growth is weighing on investor sentiment. The real question now is the global stock market's growth engine running on fumes. Take a look at our next report as we dive into the outlook for next year.
For a long time, investors have put their faith in the largest tech firms to drive stock market growth. That is largely thanks to their robust earnings and projections for even greater future revenues. This has lately been boosted by the creation of artificial intelligence services. For the time being, it seems like those days are in the past. As the current stock market boom approaches its third year, it is compelling investors to find new methods to profit. Returns are at the heart of the matter. Bloomberg Intelligence reports that the so-called Magnificent Seven, or the seven largest technology companies in the world, including Alphabet, Amazon, Apple, Meta Platforms, Microsoft, Nvidia, and Tesla, are anticipated to report a combined earnings increase of 18% in 2025. And that is down from a projected 34% in 2024. After excluding Nvidia, which has been the most benefited from Wall Street's obsession with AI, the remaining companies are projected to report a pitiful 3% rise in profits in 2025. Any industry would be pleased to hear of an 18% profit growth, but not for big tech. If the prediction pans out, the high-flying category will have full-year profit growth that is not much higher than that of the materials and industrial categories and somewhat lower than healthcare. Also from 10% this year, profit growth for the S&P 500 index is expected to reach 13% in 2025. And that means tech companies aren't exactly leading the way for the rest of the corporate America anymore. Julian McManus, portfolio manager at Janus Henderson, told Bloomberg the Mag 7 is not necessarily going to be the engine of growth for the market that it has been for the last year or so. That narrative is already playing out. A Bank of America report using data from EPFR Global stated that the tech group had its worst outflow in 6 weeks of $1.4 billion in the December 4 week. On the contrary, inflows into the small cap stocks of $4.6 billion for that week brought the total to above $30 billion, setting a new yearly record. Broadly, small caps have lagged the market as a whole this year. The valuation is the biggest concern for the big tech firms. The S&P 500 index as a whole also witnessed a market value surge. However, when compared to the values of big giants, it is about half the price. Wall Street has, of course, previously failed to fully appreciate the power of big tech. Analysts had predicted a 19% increase in their earnings at the beginning of 2024, but the group is now expected to see a 34% gain. Business Bureau Report, WION World.
For latest news, download the WION app and subscribe to our YouTube channel.